What's happening in the world often goes unnoticed, even when it occurs in plain sight, right before our eyes. That's happening to investors right now, with the explosion in the growth of retail sales that's been underway for years, but has gone unnoticed. The boom is being muted by inflation, but is loud and clear with that adjustment. Since consumers account for 70% of U.S. growth, retail sales is a key driver of the economy, so this is a big miss, a big misperception for investors to make. These were the top stories on Google the day after the latest retail sales figures were released by the U.S. Census Bureau. The headlines show retail sales were up, but there's no hint of the boom. Yet, when adjusted for inflation, retail sales have grown explosively for years. Here's the proof. This line charts monthly retail sales data over the last 15 years, adjusted for inflation, and this boom over the past 10 years is clear. Look at where real retail sales after inflation is today versus the peak of the last economic expansion in 2007. Real retail sales were flat through the peak years of the last economic expansion. In contrast, this 10-year expansion has been marked by this steep growth trajectory in real retail sales, and it does not get mentioned in the news. Here's why. Every month, the media are given a press release that does not adjust for inflation, excluding volatile gasoline prices, which can distort the monthly figures. Retail sales in the 12-month period through May rose 3% without adjusting for inflation, which is not bad, but certainly not a boom. The media doesn't know that reporting the Census Bureau retail sales data without adjusting for inflation masks the retail explosion that's been underway for a decade. Biases and gaps in knowledge often clouds how the world is viewed. That's where a financial professional's perspective adds value.